this video, I want to go over the Fibonacci Entry Algorithm, and this is the beginning development that will be uploaded to the Money Management Algorithm membership area course. And you can see today we have a signal strength trader getting in here, and also there was a signal strength indicator that strategy that entered here. And we asked the question, what if we started on the Fibonacci retracement? This is almost a really good, lines up to be a really good Fibonacci retracement. So if you get in here and take this short trade, delay your short till it rallies back a certain Fibonacci amount that you can define. Same with the long signals here. Instead of buying right here, you could wait and maybe buy in this time frame. It's towards the end of the day though, so you kind of run out of time in this example. And in this example today, there was a little bit of a retracement. Our stop loss was up here, almost was hit. And so again, the question comes up, should we wait for a time delay or a retracement delay or both to get in and short it at a better level? And so I've tested this, and let's take a look at what this is. This is our signal strength trader. And so what are the current what's the current performance as it is? And so this is the current performance. It just tapped a worst case drawdown. This is the worst case drawdown over the last 3 years, and it just tapped it recently, and we're looking for a bounce in here on the signal strength trader. So could we improve it with a delayed entry? So here is one variation. You see we have it uses basically a 50% retracement. So there's that high, there's the low, and 50% of that, if your strategy is short, it will get in on a 50% retracement, and then it comes down here, it gets out at the exit time. Same thing here, high, low, about a 50%. I guess it's 50% retracement. Doesn't look like it, but it is a 50% retracement. And then it comes down here, it hits its profit target here instead of here. So instead of entering here and taking this trade, the trade gets in at a better price. So this is one variation of it. It's also using momentum on this strategy to fade it, but the results are not as good. So these are the results, and this is one of those things that for short signals anyway could work better going forward in time. And so this Fibonacci delayed entry algorithm could work better going forward than it has in the past potentially, and I want to explain why, and then I'm going to show you another variation. So if you think about long-term trends, there are several phases. So you have a market that's in a bull market for many years, and then maybe it's time for a bear market. So the market kind of goes sideways. It's hard to make money if you're trying. So for example, if you're trying to short the market up here, it's definitely difficult in a strong bull market. Then it goes sideways, and you make maybe a little bit, and then this is maybe phase one, more sideways, and then maybe the market starts to go down, but it rallies back a lot. And so you can short the rallies. What you want to do is short the rallies, and then that market gets going, and then it goes straight down, and then you want to short momentum. So you potentially have 3 phases, and the markets don't always work this way. This is just one way to think about it. It's based on observations. You need a sideways market that's transitioning, a market that you short rallies, and then the market where you short momentum. And so right now we've probably are somewhere in between 1 and 2. So we've gone sideways for a long time, and now maybe we want to short rallies and then short momentum. And so a lot of our strategies short momentum. That's what's worked in the past, but with this market, we've had an unusually long cycle of 1 and transitioning into 2. And so who knows how long 2 will last? Who knows how long 3 will last? Who knows if we'll flip back to a bull market? And so 3 potential phases here that we could see in a bear market if it happens, and we could be between 1 and 2. And that's why I anticipate that something like this, where we work for a delayed entry instead of shorting momentum, we wait till the market rallies a little bit and then short it. And even though, if you're trying to find signals that work on the short side, it's hard to find signals that work on the short side in the past few years because this market has been upwards in an uptrend so strong that you have to go back further and look at some of these short signals that work, and then maybe potentially add a Fibonacci entry algorithm to it. I want to do another variation of this. So in this case, we get rid of the momentum indicator, and we just use a 50% retracement. And historically, it does not work as good, but it has worked recently. You can see these last few trades it's worked. Also, if you looked at some of these other strategies like Cobra 3, certainly would work to short a bigger retracement on Cobra 3. It would certainly work to short a bigger retracement on Tick Pulse. And so something to look at, something to think about, and the short side may work differently than that. And I will this is 50%. I'm going to test 31.8% and 62% as well, and then come back with any details on that. But look for that. Even if it doesn't improve an existing strategy, right? For example, on this strategy, it can potentially improve other strategies. It's one way to test it, to quickly test a Fibonacci retracement based on your original strategy. It's not easy to program a scenario where you say, it got short there. What if I waited here? And so it's not easy to reprogram your strategy. So this will be a tool that will allow you to trade a Fibonacci retracement version of your strategy. Test it and trade it if it works. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.